IT remains in focus, and let's try to pull up some of those names: TCS, Infosys, Tech Mahindra, etc. And on the back of course, TCS earnings, the sector itself is gaining over that 1% mark. And to understand as to what's next for all of these players, we're now joined by Sandip Agarwal, who tracks this space very closely. He's a fund manager and co-founder at Sowilo Investment Manager LLP, joining us now. Sandip, a very good afternoon to you. Mahima this side. Thank you so much, first of all, for taking out the time. I'll start by asking about TCS first, because it's not like it's a great set of numbers, right? It's an inline set of numbers, but the hiring number that came in as a surprise at a 15-quarter high. There is some bit of surprise that is coming in the AI revenue as well. Just want to get a sense from an entire perspective of the first earnings in the IT space as to how you're viewing it, and will this follow through in the other names as well, because you're seeing enthusiasm in the other names as well.
Yeah, hi, good afternoon, and thanks for having me on the show. So I will say that, while I don't give any comment on any specific company, but let me tell you that the number which has come, they are in line and they are decent. There is no negative shock in the numbers. Obviously, because so many people are talking for so long on channels globally, not only in India, for in favor of AI and semicons and chips and everything. So no one is right now focusing on IT services, and because in the US a lot of money has been made in AI related companies. So even there the services companies have suffered very badly on valuation, and we are just following that. So Accenture, you can see how badly it has been hammered, and Cognizant how badly it has been hammered, and same thing is basically flowing into India. So I would say that whenever an inflection point comes in the industry, it always comes in this way only, that you will have stabilization in a particular quarter, and then things will move up. Now I would only reiterate that we have more than 80% market share in IT services. So it is very difficult in this outsourcing part. So it is very difficult for us to outperform or to the industry to grow in a big way. So this is a sector which will grow at a slower pace for a longer term. I think at large companies at 6-7% dollar growth will be a good growth to assume, and but the profit growth will be much better. And with those numbers, if when you do the working, you find that the numbers are not at all bad. And for that, I think the valuation has corrected meaningfully. So there seems to be good upside at the sector level. And obviously, there are many stocks which are deep value, which are small cap and mid cap as well. So barring ER&D, which I am still cautious for another 15-20% downside, I don't see downside in the IT services space. And the chain is same every time. What happens is people mix disruption and cycle together. So please don't mix disruption and cycle. Cycle is same every time.
Correct. That makes a lot of sense, Sandip, because what you mentioned is correct. But from what you said, just trying to follow up on that, you said that there is valuation comfort in a lot of names, and you're saying that small caps and mid caps is where you're seeing more risk to reward ratio, if I'm not wrong. Is that reading correct? And in the large cap space, because a lot of these names also have weightage in the Nifty 50 per se. I mean, if somebody is viewing at the theme as a whole, because there are brokerages who are also saying that IT could be the next horse, dark horse, because it is a possibility that foreign companies could come to India for their AI applications or solutions, etc. And this will go through via Indian companies only. So how are you viewing that comment? Plus, in the SMIDs, where are you seeing more value? And if you were to play the large cap theme, how would that play out to be?
No, so I am very clear in my mind what is going to happen in the space. So I have no doubt. So let me again reiterate that the hardware players have benefited in a big way. Now the foundational layer player like the Groks and Gemini are all doing well, and we will also do well when the enterprise version of this starts getting implemented. So I am not at all in confused mind, or I have zero doubt that we will not do well. So there a lot of demand and growth will come, but understand that this is the first disruption in last 25 years. Where efforts is going down by 30%. In past, all disruption, what has happened, technology has transitioned from one to another. So there was a lull period of 4 quarters, 6 quarters, and then huge pent-up demand used to come and compensate for all the losses. This time, that will not happen. We will not get back what we have lost. Almost 30% of effort reduction has happened. That is permanent and that is going to stay. We have to move on from here. So I'm just saying that even if you do that maths, the EPS growth for the companies for next 3 years cumulatively is between 45 to 70%. And even if you assume zero re-rating of the sector, which is unlikely, then also you will make at least this much return of 45 to 70%, which translates to 12-13% to 15-16% or 18% CAGR, which is not bad at all. How many companies does in Nifty grow at that pace? Secondly, to your point, large and mid cap and small cap. See what has happened. Small cap after COVID, the time to execute has become very important. So earlier what used to happen, client used to give ample time, 5-year, 10-year to execute project, and hence they had very strict criteria of choosing and how much contract in the past you have executed. So by default, Accenture, HP and large Indian IT companies were only allowed to participate in global transactional deals. Now post COVID, what has happened, there is a lot of democratization. The time has become essence because of digital. So everyone wants to do very fast turnaround of the project. So everyone has been invited in every tender. And that is the reason the mid and small cap growth for in last 4-5 years has been much higher than the large cap, which was opposite earlier. So I think this trend cannot reverse. Mid and small cap will definitely continue to do much better growth than large cap. And hence, till someone who wants to buy a very illiquid name and large name, the large caps cannot move meaningfully. So when will that happen? That will happen when the US investors starts seeing value in IT services there. That means they start buying Accenture or likes of that, and then they will stop selling what they're selling in the large cap in India, and then you will see meaningful upside in the large caps. Otherwise, large caps will take 6 to 9 months at least to recover in a meaningful way. But in mid and small cap, what is happening? The local mutual funds, the local HNIs, the local PMS, the local AIF, all are buying because they are going by the growth numbers. In the large cap, that is not true because large cap growth obviously is lower. And second, FI selling pressure continues there. And also FIs are not buying. So everything is going against large cap. So 6 to 9 months it can persist. But finally it will do well. That is what my call is.
Got it. Fair analysis, Sandeep. Just one last quick one from my end, because I think what stood out in TCS was also the part of hiring, right? There's a significant hiring growth coming at a 15-quarter high is what we've seen. Do you think that will follow through and this trend should continue from here on?
So I think, one thing is very clear that, people who are writing obituary of the sector that it is gone, I don't agree to it at all. I've seen this 5 times in my life. I can tell you there is a lot of demand and the ecosystem, you just see Naukri number next 2 months and you will realize that what kind of hiring has again started. So AI related talent is in short supply. Everyone has started looking for it. What TCS has done, I cannot say that everyone will show a very high headcount addition number. But I think we are very close to, again, hiring picking up. So I am not in the camp which believes that, there will be layoff in the sector and people will lose job and all that. I am in the camp which strongly believes that 80% of the pain is behind. I don't know this is the worst quarter or next one will be the worst. But we are 80-90% of the pain is behind us.
Got it. Sandeep, thank you so much for putting that perspective, perfectly, because that optimism is now being reflected in the way stocks are moving as well. So thank you so much for taking out the time and helping us understand the entire IT space. Pleasure speaking to you. Let's also quickly pull up the IT names.